Welcome to TradeTheMBI.com. This is John. This report is for the 23rd. We're kind of looking for a little bit of a rebound effect. We had seen the Magenta making a move early, and we had reached that DOC level here where we look for some type of resurgence. Doesn't mean that things have completely changed, but there was some benefit here with the declining orange here, and steel had continued to rise as long as it was making its move. Of course, it's going to get into a bit of an extreme area where this could be the beginning of, when you look at some of these other previous ones where you've had these deep sell-offs, and that led to the beginning of, back in November, of a pretty significant rally. So it's an interesting one when you look at it from that broader perspective. Is it a little too early for that? Maybe so. But there's a broad camp that thinks that, opportunity, with the sell-off that, things being, not dire is an opportunity to buy. um, but there's still some headwinds, and I think that when you look at the differential between what we see in the Nasdaq versus the S&P, you can see that tech has a little bit more negative bias within the readings. You can see it's still pretty strong from a MBI white lead here, even though the magenta rising there should keep things relatively muted and in range, and it still has extremes below the red line. So we haven't seen an evening out yet of the balance between the two markets. So until that happens, I think you're just going to get some a little back and forth until that can kind of even out. From one viewpoint, they're thinking, well, there's a big discount right now, so it might be an opportunity to jump in, and that assumes, of course, that there are no new headwinds, and particularly on the geopolitical front, that's really where the biggest upset is, because the knowns of what's going on with the economy and things like that are pretty clear. I mean, we have a fractured situation where the continued rising rates, rising inflation continues to put pressure on things, but at the same time, that devaluation actually increases the overall net number that the market has to achieve to maintain itself from a baseline. So, people get confused at that, and they think that, well, everything should just go down. It doesn't work that way. They're not going to take the haircut from the uh, inflationary situation. So you're going to get the rise there, but then everyone starts talking about multiples and that, and that's never been really too much of a huge factor. There's always a skew to it. It's based on what the potential for the future is. So when we look at things like treasuries and that, still outside the lines, and until it gets, treasuries actually moved closer to the real yield, I think that the market would have some serious difficulties. But I don't think that's happening anytime soon. There just hasn't been the collective belief that the Fed isn't going to turn around and just soften completely. The abatement in oil really is the broadest protection from a declining market. So if oil continues to fall, yeah, great. But if it maintains itself or continues to accelerate, then I think you have trouble justifying where things go, because it becomes problematic for maintaining um, the ability to justify continued growth, at least in a broader sense from a near-term standpoint. And I think that's relative. And so the euro climbing off of negative oil situation, gold taking an ease back, and some of that's just natural fundamentals. We expected that with some of the positive extremes they're going to get filled back. It's just a matter of waiting for the signaling to occur. And this is what I even said on the Skype chat. It's like, we'll see a turnaround when it comes. It's not an automatic thing. It's just one of those where you wait until the signal clears itself, and then transfer to that. I think from a crypto standpoint, and this is going to be similar. Again, it follows pretty well where the money goes, and that's exactly what we're looking at from an MBI. The magenta, you look at it from the DOC standpoint, the crossover, and getting into those what we can see as definable oversold points. You're never going to be exactly perfect within it, but you could tell at those certain extremes that there's going to be a change. And we particularly get a little bit earlier. We're still late in the sense that the bigger players have already executed the move. This is the whole point of the extreme histogram, seeing that spot where the algorithm has taken place and knowing that it's going to return to that. It's just a matter of waiting. We don't know their timeline, and we're just waiting for them to give the signal on when the timing changes on things. And so, as simple as it was from the short standpoint, the buy program picks it up when the magenta makes its move. Sure, we got the NBI white spike, but we know there can be a divergence to that. And so the next time the NBI white leads, yeah, okay, we know we're going to see that reduction. The question will be how much of 0% will rise for that meeting point. In this particular case, it was a fairly clean long, shot right up, came back, closed out from a little short burst of it. Fairly straightforward. And then you get a little bit of a soft period, in this case, the DOC spread. And you still have a pretty significant positive shakeout, NBI gold still up there. If that starts to fade, well, then you can look for another round to the downside. But until then, no. So this is why I was saying, it's not going to be a unidirection where everything collapses all at one time. No, there's going to be back and forth to it, as always. And this was pretty clean, even from a 5K standpoint. At the early build, shortly after a little dip in the market, sort of ran out of supply. And like I was saying with the option situation, they needed to create that reversal. Too many people jump into the puts. They've got to then start buying calls or buying stock. And at that particular point, that's when you get these rallies, and then you see the squeeze effect, where all those shorts start covering. As soon as they're done, you fill it all right back in. And that's just the mean reversion of S&P has sort of always been a set thing, and we had kind of lost it for quite a few years during the heavy push with quantitative easing and that. And a few years ago, we just watched it come back shortly after the COVID to a more normalized trading, and that's what I would call this. It's fairly normal. Here we are in the European session here, still holding on to just above the positive line at this particular stage. We could probably see some move back and forth in there. It's going to be a tough one. Then getting over that 23% is kind of a critical one on the daily standpoint. So keep an eye on that one. And I think from above that, it's a long situation. It's probably going to fight back and forth, at least for another few days. But you just have to be prepared to go with the signals as they are. And that's the long and the short of it for now. As always, anything wrong, I'll put it on the Skype chat. Have a good one. Trade well.